So you've done the hard part. You've waited for weekly or 2-weekly accumulation and manipulation. Now you're looking for distribution to your first target in the market, the high of the accumulation candle that has been swept. AMD, accumulation, manipulation, distribution. Price actions aligning. You have everything you need to enter the trade. You get involved at the right point. Stop loss is set, and then you get stopped out. Just like this 3R trade that turned into a loss on EURJPY. This is so frustrating. Why does it happen? It's very simple. There is a front run target that is building against your trade. And if you're not aware of those front run targets, those higher time frame candle targets that are being printed in the market, you will hit more losers. And that is something you want to avoid. So let me show you exactly how to be aware of front run targets, how to use them to your advantage. So I'm just going to take this away and show you what I was looking at. So this is a 12-hour chart. This is 12-hour price action. In isolation, this means very little. But I'm going to use it for execution in line with higher time frame candle behavior, because that's what we need to paint the story in the market that builds our trade thesis. So let me introduce the 2-week candle. So what do we see here? We have this bullish 2-week candle that prints. 12-hour price action is bullish. And at this point, we're looking for continuations. So imagine you're looking at price action as this candle prints. It's a bullish candle. What does price then do? It continues, it goes higher, but instantly we get a shift. So price has raided the external range liquidity at the high of its previous 2-weekly candle. Then what happens? Price consolidates and then prints. It has confirmed accumulation, manipulation. So if we're looking at AMD targets specifically, the next draw on price would be the low of the accumulation candle that has been swept. This is classic AMD. What do we then see? Well, price sells off and we get the creation of this inefficiency in price. Here's candle 1, here's candle 3. This is a bearish setup, a bearish fair value gap. So we have the order block, which is sitting right here. And then we also have the fair value gap that I just mentioned. So we have everything we need. We have price action aligning with our target. So it would be perfectly feasible and understandable to get involved in this trade. Either cover the order block high or the swing point itself, and then look for shorts to our target. That would be a 3R trade, just over 3R. But what happens? Price fakes lower and then instantly stops this trade out. Why does that happen? So this is the biggest risk to any AMD trade that you take. It's a front run target that is building against your trade. So the whole process of being a successful trader is to understand how targets are being set in the market and whether they're in correlation with each other or whether they're in conflict. So let me show you what I mean. If I bring up the monthly target, when this 2-week candle prints, we're also printing a monthly candle. So in this price action here, we can start to get a read on what we think the monthly candle is going to do. And this is front running the market. So I take away the 2-week candle, providing the price doesn't just drop away, this candle is going to print bullish. It has run its previous candle and it is printing above it. So this is now a monthly continuation profile. We're not expecting price to retrace down to this level. We're expecting price to draw on the monthly time frame higher. It's a continuation. So we now have 2 targets in the market that are in direct conflict of each other. So ideally what you're doing here is you're waiting to see. If you're getting into this 2-week trade, that's valid, but you need to use proper risk management and you need to ensure that you're breaking even on the trade if something reverses against you, because that's exactly what happens. Where does price gravitate to? As soon as this monthly candle closes, we get a sweep of the previous 2-week candle, and then we get instant distribution to the monthly front run target. That becomes an active target at the exact point the monthly candle closes. Now, How do you get a bit more laser precision into what price is actually wanting to do? You just drop down timeframes. So if I bring up the weekly time frame, what do we see? I'll take away the monthly and this becomes so clear. So at this point here, price stings into the bearish fair value gap that we identified. It then sells off, but then price reverses and closes. So the monthly candle has accumulated and it has now manipulated in a bullish setup. This is a bullish weekly AMD. Accumulation, manipulation. Now we have aligned targets. We have target 1 on the weekly time frame, which is right here, the high of the weekly accumulation candle that has been swept. This is an inside bar. So in my view, this is inheriting the behavior of its previous candle. So actually the target is right here. It's aligning with the monthly target. So we don't need to draw that as our first target. It's this target here. It's a monthly continuation. So whether we get an active opportunity on the 12-hour to get involved is not part of this discussion. What I'm trying to show you is that by understanding how higher time frame candles are printing, you can stay out of the wrong trades and actually wait for the right setups where you have targets aligned in the market, because these are the highest probability trades. And actually the secret here is to drop down onto your execution timeframes, the 6-hour, the 4-hour, and even the 2-hour to get involved in this continuation. Then you have a separate 2 or 3 or 4 or 5-hour trade. That is how to use front run targets. Always stay ahead of the market by understanding and anticipating how higher time frame candles are going to print and what implication that has for targets that are being set in the market. The good news is this might sound overwhelming, but I'm developing a specific web application that is going to do this all for you. It maps the market every hour across every Forex pair, and it keeps you constantly updated on what targets are active in the market and whether they align with your trade thesis. So stay tuned and I'll see you on the next one.